Good morning, good afternoon to everybody. Very welcome to this webinar of the Public Development Banks for Water initiative. We are very happy to have two eminent speakers from Public Development Banks, Tim Segbauer and Marta Saracin from the Polish Development Bank. So we are going to focus on learnings that we have taken away from a recent roundtable on financing water that the OECD organized together with its partners that focused on water-related risks and financial resilience. And the objective of today's webinar is to have an open conversation with public development banks, but also with other stakeholders on lessons learned from this type of discussion that was mainly focused on central banks and financial authorities. What is in there for public development banks? How can we learn from that? And what is the specific types of conversations that public development banks can have with central banks and financial authorities? So I'm Sophie Trémollet. I'm the water team lead at the OECD Environment Directorate. And before we delve into the topic, I will give you a little bit of housekeeping rules, but also an insight into what the Public Development Banks for Water initiative is, for those of you who are not familiar with it. And then we will hear from Marta Saracin, who is head of ESG Strategy Office at BJK, which is Polish Development Banks. She's also a hydrologist by training, so she has a very good insight on what water-related risks are for the Polish economy. So she will focus on that, but also tell us a little bit more about how the Polish Development Bank is taking account of these risks and what they're doing to manage and help reduce those risks. I will then give you some insights from the roundtable on financing water that the OECD is leading, and we will discuss the key takeaways for public development banks from the Madrid roundtable. I will then turn to Tim Segbauer, who's Senior Advisor, Regulatory and Corporate Affairs at the Netherlands Watershed Bank, which is a leading public development bank in the Netherlands, which was originally set up to invest in water, actually, but is now diversified. And he will give us lessons from the Dutch experience, but also his own personal reflections on the 13th roundtable, given that he was one of our participants and speakers at this roundtable. And this is a webinar, but we'd like to engage with as many of you as possible. So we will then have a discussion with the audience before closing. For this, the purpose of this discussion, there's a few rules, housekeeping rules that we wanted to stress. One is, as the speakers are speaking, please keep your microphone muted. Try to put your name and institution visible if you can. This you need to change it if it's not appearing. And if you have questions, please go to the Q&A function at any time, and we will either reply in writing in the Q&A function or orally. If you'd like to ask a question directly, you can also raise your hand, and we will give you the ability to express yourself. If you have any technical issue, type your question in the chat to the host, and we're very lucky to have Dania Merla with us, who's Junior Policy Analyst at the OECD, who will be on hand to address any issue you might have. So we'd like you to engage constructively. This is a space for learning, dialogue, peer-to-peer exchange, and we very welcome your views as this is a fast evolving topic. So before we have the pleasure of hearing from Marta, just wanted to say a few words about the Public Development Banks for Water initiative. It's an OECD-led initiative that was launched in September 2025. It builds on the earlier achievement of the Water Finance Coalition that had started back in 2021 under the auspices of Finance in Common network. It was originally chaired by the Agence Française de Développement, and we're very grateful to AFD for their support for the Public Development Banks for Water initiative, and also had co-chairing arrangements with CAF and Banobras in the Public Development Bank of Mexico. So our current activities as the Public Development Banks for Water initiative are threefold. One is to help build a community of practice, and this webinar is a key example of that, because what our objective is to raise awareness on the water sector investment needs, as well as on innovative financing schemes among public development banks and water sector actors through regular outreach. So we have regular meetings for participants, thematic webinars such as this one, and we also have a LinkedIn community page that you're welcome to check, but join, and also provide content for that we would happily repost so that it can be shared with as many people as possible. Second pillar of our work is to conduct analytical work so that we can help PDBs increase the scale and quality of their water finance. One component of that work is to improve the tracking of water-related investments, and we are ourselves collecting data on what has been invested by PDBs in 2024-2025. This builds on an earlier report from the Water Finance Coalition that looked at the earlier years from 21 to 23. And we are aiming to publish the numbers by the time of the UN Water Conference, so that these numbers can be weighed in and considered in terms of how PDBs are contributing to address the investment gap in the water sector. Second, we will be publishing a working paper on the role of public development banks in financing freshwater restoration and conservation, because this is a rising topic and very much linked actually to today's conversation, as we know that investing in water resilience very much depends in investing in the ecosystems that support this resilience. And then last but not least, we can also engage in country level work, and we are actively looking for countries or national public development banks that would be interested in assessing their role in the financial landscape of financing water, and potentially in how they can better engage with financial supervisors. So if you're interested in this country level work, please come forward either in the Q&A, in the chat, or with a follow-up email. So with that, I'll stop maybe I'll go through this last slide before giving the floor to Marta, because as we have mentioned in the title, the idea here of today's webinar is to reflect on the discussions that were held at the Roundtable on Financing Water in May 2026, which was held in collaboration with the Banco de España in Madrid. And I just want to highlight that these roundtables on financing water have been going on for some time, since 2017. So the roundtable we held in Madrid was the 13th edition. Each time we focus on a different theme or a different region. You have the list of the roundtables that have taken place. And the objective is very much to advance research on financing challenges. We do that through the meetings, but also through analytical work that underpins the meeting and also builds on those meetings in the form of policy paper. And we want to bring together the finance and water communities across the globe to discuss these topics. So that's why for us it's very important as water sector professionals to engage with financial professionals, and today we're focusing very much on public development banks. With that, I'll leave the floor to Marta, who will tell us about her experience with the Polish Development Bank and how you are considering water-related risks in Poland and doing something about those. Thank you very much. Over to you, Marta. You're welcome to share your screen. Yeah.
Yeah, I'm just starting sharing my screen. Oops. Can you confirm that it's visible?
It is.
Great, thank you. So thanks for having me today. I would like to address some issues connected to water risks and how we manage them as a Polish Development Bank. My name is Marta Saracen. I'm from ESG department. I'm a head of ESG Strategic Analysis Office. It means that we cover both risks and impacts in terms of environmental, social, and government issues in BGK. I will briefly introduce you who we are, what is the Polish Development Bank BGK, why water is an issue in Poland, and how we manage it. So starting with BGK, we are a state-owned bank. We are one of the 5 biggest development banks in Europe. We are also a bank with quite a history. 2 years back, we celebrate our 100-year anniversary. We are placed in Warsaw, and we've been decided that our crucial goal and our vision is to support sustainable socioeconomic development of Poland. So it means that most of our portfolio of projects is based in Poland. On the screen, you see some numbers to just show you how big and how small compared to your institutions we are. Why water, and why water is important for a Polish Development Bank? Just a few slides to show you the state of the water in Poland. The first is obviously a drought. It's summer. It's the hottest time now in Poland. Yesterday we broke some new temperature records. It means that we're also facing quite huge droughts. According to drought management plan for Poland, the largest part of the country is in high and extreme risk of droughts, both hydrological, but also, unfortunately, also for droughts on groundwater. In time, the periods between droughts events went shorter and shorter, and we can say that since 2018, we have every single year facing a drought period. On the other hand, flood risk is also an issue in Poland. Almost 29,000 kilometers of our rivers are in risk of flooding. Last years, we faced quite huge floods. One of BGK clients lost assets exceeding almost $25 million just in assets, not to discuss how it impacts their OPEX. Adding another factor to this quite not very happy view of the state of Polish water, we also are facing quite huge problem with water quality. The map you see is official assessment of surface water bodies and how they are dealing with environmental objectives due to Water Framework Directive. It's not so bad as it seems, because it seems like 98% of Polish rivers are critically polluted. It's not that bad because there is a rule one out, all out apply for this assessment. So it means even if one substance is cross the threshold value, it means the whole water body is automatically assessed as failing the environmental objectives. However, the issue with nitrates, phosphorus, and some chemicals is still pressing matter. So from this point of view, both water quality and quantity are issue for the water management in Poland. For bank perspective, we see that there are a difference between different sectors. and the lack of water or too much quantity of water is affecting Polish economy. Just few numbers. The cost of the pollution of Odra River badly damaged the tourism sector due to lack of interest in 2022. We also faced huge flood in September 2024. It was so huge that the in very small region, but still the damages were estimated over $6 billion for just 16 small regions. So it means that the impact was quite huge for the country, but also it was huge for local governments. But we are also seeing that there are sectors more vulnerable for water quality. Some sectors are depending on water quantity. Some sectors are dependent on both water quantity and quality. So how we deal with that gloom vision of water management as a huge risk for economic development? We included as a bank water as a part of ESG risk management way of assessing the projects. We do not prepare specific framework just for water. We see water as one of the crucial factors in environmental part of ESG. So it means every framework that we use as an embedded way of managing the risk is also covering the water. So where we use water-related, where we see and how we manage the water-related risk in BGK, the most important part, in my opinion, is using water-related factors in credit process. We use both risks of draft and floods as a part of ESG scoring. It impacts on credit standing of our clients directly and indirectly. Directly via their losses connected to events during the analyzed period of time. It's 2 years back. And indirectly, because it also impacts on ESG scoring for every single client. We are also stress testing water-related factors. We use them both in short and mid-term stress testing, and we use 5 different factors connected to both draft floods, but also water quantity and quality, like the dependency of our clients on water and water scarcity. We use these factors to assess the materiality of ESG risk. This part is material. It means also that from reporting perspective, we see water as material topic under ESG reporting. We also use drafts and floods, so the physical risk for resilience assessment for long-term scenario, using scenario analysis to see how resilient is our portfolio in the future. Due to stress testing, we also see impacts of water-related risks in our internal capital. We calculate internal capital for ESG risk as one. We don't have specific internal capital for water-related risk, but still water is one of crucial factors just after the climate mitigation and adaptation factors. The last part where we use water-related risks in our daily work is to assess the physical risk of collaterals. We use both direct and indirect impact of collateral value using the scenarios of loss of the value of property or complete destruction of the assets. All this information we are required to report. And the last part, which I want to present you and just to start a discussion, is what are the crucial challenges in this area of risk management. First of all, it's just obvious probably for everyone is their data collection, because collecting data about our clients in credit process is one of the crucial and most important parts to conduct good quality risk assessment. And to be honest, not all the data that we really want to have are available. They are also not so much available on country level. Like the sectoral data on water consumption from different sectors. It's not so obvious to find such data. Even public statistics shown some gaps in this data. We are also struggling to insert new types of factors, because we are developing new, more consistent types of factors connected to water, to existing methodologies in credit process. These new factors are working in different way as typical factors connected to credit risk, and due to fact the ESG risk is embedded in credit risk as a crucial part of it. It's not so obvious to find a way to implement different, not typical for bank factors. This is something new for us, so we are really keen on listening how others are working on ESG risk management in capital investments due to the new context of investments of funds. So we are assessing investment portfolios. We are not dealing with one client, and to be honest, the most available data are connected to climate change, to GHG emissions, not so much about water-related issues. We are also in ongoing discussion on how to include risk mitigators as a part of different types of assessment that we conduct. Especially, we are discussing about insurance and connection between insurance and the value of the collaterals in terms of flood risk and draft risks. We also trying to find good way to assess the sustainability of our projects due to very narrow scope of EU taxonomy activities. We see a wider range of projects that we could consider as sustainable in terms of water, but they are not in line with EU taxonomy. There is lack of that kind of activities in the regulation. And the last part, which I'll give you a bit more information, is supervisory interest. Because this is something that is still ongoing. We are closely work in the sector as a banks together, but we are also facing the regular exams on how we manage other than climate risks, including water-related risks. Our regulator is using this as a part of regular exams of our institution and all other Polish institutions, but also we have specific targeted questions from our supervisory for the institution. For example, last year they were asking us about coverage of our portfolio damaged by flat in 2024, but they also ask us whether we calculate the money value of adaptation for future events in this area. They also conducting some exams strongly connected to implementing in credit standings of our clients connected to drafts and other physical risks. So it means for our KNF, the supervisory authority, this topic is quite material. They see that we need to work and implement more. We are probably sometime before that we will have some supervisory guidelines for our supervisory authority. As a Poland, we are not in a part of Eurozone, but still all the guidelines which are presented both from European Central Bank or European banking authorities are directly applied for us, and our supervisory authority is regularly and strongly checking how we are implementing these guidelines in our work. So thank you for your attention.
Thanks a lot, Marta. And I know that unfortunately you need to leave us shortly, but your presentation prompted many questions. So if you have maybe 5 more minutes to stay with us, I'll give you a quick rundown of these questions. So there was one about whether you apply those tests to all sectors, or whether or is it to part of your portfolio only. Then there was another question about how you can explain the concept of materiality of risks, whether you have any empirical
these are
evidence.
Connected. So I will start with
these. There's a third question. I'll give you a third question, which is a question from Andy Robbie at FCDO, who was very complimentary on your PowerPoint, but also asking whether you had been talking with credit rating agencies like Moody's and S&P's, because they are developing interesting water risk frameworks. So are you trying to link or build what you're doing on these frameworks? Over to you. Thanks.
Okay, so I will start with stress testing and materiality of risk, because these topics are really connected. We prepared a long list of ESG factors, risk factors, which we want to firstly assess if they are material for our portfolio, because the list is covering all the sectors and all the factors that we could prepare and could think of. And the first step of stress testing is to find the material crucial factors that are applied to our portfolio. So we used scale and probability as a part of our assessment. The scale is the portfolio, how big, what is the part of a portfolio vulnerable for that factor. The assessment of the probability is prepared during the experts panel and discussion, how probable is in short, mid, and long term, because these probabilities are changing in time. And we are stress testing only the factors that we see that as material. We are not, for example, we are not financing agriculture sector too much. This is quite a small part of our portfolio. So the damages connected to pollinators for our portfolio are not material. We are not stress testing that because the impact would be not enough to see, and the proportion of the work would be too high to see that impact. And the rest of the material factors are applied for our portfolio. We decided to draw a line on the 80% of our portfolio. So we are stress testing 80% of our top clients in terms of the capital involvement in their credits. Yeah, we are not stress testing all our portfolio, but most of it, yes, with different factors. Not all of them are material as water connected. We have some heat maps for sectors to understand which sectors are more dependent on the different factor. Maybe I can add that we use both impact radar from UNEP-FI, and we use Encore tool as well as part of our connection between factors and sectors. To the second question about frameworks for agencies, no, we are not involved in that. That's really interesting. I would like to hear about it more. So yeah, if you could share some details, I would be grateful, because I am not familiar with their frameworks right now.
Okay, maybe that's a good segue actually for the my presentation, which will share a little bit about what we heard in Madrid. I don't know if you have to leave, Marta, but we will share this with you because we had, in fact, Moody's present at the roundtable. It was one of the participants that presented its risk assessment framework, which one interesting feature was that they were looking not only at physical risks, but also at the risks associated with poor management of water resources, highlighting the fact that, yes, those risks are there and driven by climate change, by scarcity, drought, floods, etc. But there's a lot that can be done in terms of managing actively those risks, both at the level of the water sector, but across government as well, through a one government approach, because it entails decisions related to spatial planning, to agricultural policies, to industrial policies, etc., which need to be better managed for increasing resilience. So thanks a lot for your presentation, and we'll be in touch and we'll be sharing your slides if you agree. So with that, I will move back to the results of the roundtable, which were effectively bringing in some public development banks, but also a range of other speakers. And I think it was useful to have the opportunity to hear from the on-the-ground experience from Marta, because as we know, public development banks as well as commercial banks are already working on water-related risks. But she mentioned at the end of her presentation the importance of supervisory authorities. And what we're finding is that supervision authorities, central banks and financial sector authorities are also rising to the importance of water-related risks, because they see this as part of their mandate to maintain financial stability and price stability. So what we wanted to do through this roundtable that was held at the Bank of Spain, with numerous central banks present, including the European Central Bank, the Bank of Costa Rica, of Georgia, of Chile, of Germany, of the Netherlands, etc. Banque de France, of course, which leads the NGFS, for Network for Greening the Financial Systems. What we wanted to do was to bring these financial supervisors who are doing work on water together with other actors, such as financial institutions, public development banks, but also commercial banks, industry leaders, policymakers, insurers, credit rating agencies, researchers and academics, as well as international organizations working on these issues, including, for example, WWF or UNEP-FI. And the meeting was overwhelmingly well received, I think, and created a lot of enthusiasm partly because the setting was so beautiful. The Bank of Spain has an amazing old building, which and the hosting from the Bank of Spain was truly fantastic. But I think a key feature of this meeting was that the set of stakeholders had not had the opportunity to engage with each other before, and it was really a feeling of breaking the silos and getting those different communities to speak to each other. So many people, including myself, who've been working in the water sector for some time, did say that this meeting could not have happened 10 years ago because we hadn't reached that level of maturity and acuteness in some way of water-related risk. So we have a new set of people interested in this, and for the OECD and others in the room, we see this as critical because central banks can play a role in terms of elevating the water-related investment needs to decision makers, to policy makers, ministries of finance, etc., because they have an authoritative voice and also are very serious about maintaining economic and financial stability. So one of the key outputs from the roundtable will be a roadmap, both with recommendations at national level and at international levels, to see how this discussion can be continued and foster real change in terms of how water-related risks are managed. We see the important bit needs to take place at the national level, and Marta was saying that she knows that supervisory authorities are working on this, but they haven't had that many engagements so far. In the Netherlands, we will hear from Tim. There's a little bit more happening in terms of engagement. And certainly in Spain, this was seen as the beginning of a process. And we have had some preparatory meeting in Spain to effectively foster communication between banks and between their supervisors. But at international levels, there are also actions that need to be taken. And we are preparing this in the run-up to the UN Water Conference that will take place in Abu Dhabi in December of this year, with the view of potentially having a communication, a declaration by the Network for Greening the Financial System or other central bank leaders on the need to consider water as a macro-critical risk. Because as you heard from Marta, water-related risks are rising, and they're rising everywhere. It's not just a developing country issue, it's everywhere because our economies rely on a stable hydrological cycle, which has been seriously put out of balance, and the planetary boundaries related to fresh water have been crossed. So this is based on analysis carried out by the Global Commission for the Economics of Water, which published a report in 2024 that found that basically the destabilization of the hydrological cycle could cost up to 9% of GDP points for developed economies by 2050 and 15% of GDP points for developing economies who are much more affected. This is a combination of risks associated with too much and too little water, polluted water, but also disruption to freshwater ecosystems, which can come from excessive damming or invasive species, for example, which have a very substantial impact on the resilience of these ecosystems. And these risks can impact the economies, but also the financial systems through capital destruction, value chain disruptions, price volatility, which in turn have an impact on credit, liquidity, and underwriting losses for insurance sector. So this can lead to system risks, to overall macro system risks. The roundtable itself built on an earlier report published by the OECD at the end of 2025. You have the QR code here. You can find the main recommendations coming out of this report. But this is a very rich report, which also includes a very in-depth description of what these water-related risks are and how they can be understood and modeled and assessed by financial institutions. I will go quickly because we're a little bit short of time. So these were the report recommendations, and they really fed and were reflected into the key messages from the 13th Roundtable, which really sought to turn these recommendations into actionable messages. So all participants agreed that water is macro critical risk and should be recognized as a systematic source of macro financial risk. And they identified, and that partly resonates with what Marta was saying, that there is a need for better data, disclosure, and analytical methodologies. And it's better to do this in partnership rather than in isolation. So it's much better, for example, if a central bank or a group of central banks, this is what the European Central Bank is doing right now, are helping to build joint model, joint analytical methods so that joint scenarios so that these risks can be assessed consistently. And it's better to do it before rather than responding after disasters occur, such as the Valencia flood, for example. Disasters can be a trigger, a very good trigger for action. And the Bank of Spain told us that this had been a real trigger for them to consider water risks more seriously. But it's better to preempt those disasters, of course. It's important to view investing in water resilience as an investment opportunity and a source of long-term economic competitiveness rather than just a risk management challenge. We talked also about insurance. So there were a lot of comments about how it's important to close the insurance protection gap. And doing that requires shifting from reactive compensation towards proactive risk reduction. But an overwhelming message was also that there's a need for greater collaboration, greater policy coherence across a range of policy areas. So going back to our topic for today, as I said, we had a number of public development banks which were engaging in the discussion. They stressed the importance of investing in water resilient portfolios and to look at that as a business continuity issue. So whereas many banks used to see water as a specific sector to invest in, for example, to invest in pipes and treatment plants, now they're shifting to an approach where they consider their entire portfolio and look at the resilience of their portfolio to these water risks. So that can prompt different types of investment in industry, in agriculture, in a range of sector. I won't second what Tim said in the meeting. He will have the opportunity to tell us more about this. So just to close, we think that, based on what was discussed in the roundtable, and there will be a policy recommendation paper that will be published by the end of the year, so you'll have more opportunity to delve into what was discussed. But we think that for PDBs, they should continue to identify investment opportunities to manage and reduce those risks. As I said, it's not limited to investing in the water sector, it's much broader. To build water resilient products, portfolios, and offer products to their clients for water investments, but also to engage proactively with central banks and financial supervisors to jointly identify water-related risks to the economy and financial systems, do that as a group, and contribute to the development of supervisory and regulatory frameworks to integrate water-related risks into financial regulations. So not wait for supervisory authorities to do that, but be proactive so you can get a chance of shaping as well what these frameworks look like. So I will now turn to Tim to kickstart the discussion and provide us with his reflections on Madrid. Thank you.
Well, thank you very much for having me. And before turning to that, I think it is good to have a brief introduction of the bank I'm working with, NWB Bank. It was founded after the devastating flooding in 1953. And our bank is owned by water authorities, 80%, and the Dutch state, around 70%. So we are, well, government-owned, if you will, and that's well one of the common features of public development banks in general. We have ratings from Moody's and S&P. We are AAA rated, so very good credit standing, and that's due to the activities we have and also by the ownership. So the activities are all related to the public sector, and we are a non-profit maximizing institution. And we're the 5th largest banks in the Netherlands. And we are here for 72 years, so a little bit less than BGK, which was, if I'm correct, over 100 years. So now maybe turning to the Dutch situation. So I think it was, without wanting to echo what Marta already stated, I think it's quite similar, to be honest, in Dutch situation, but that's also not as a surprise, because if you look at a recent ECB study, water nature at risk, it was found that water-related ecosystem services dominate in terms of risk. So you have groundwater scarcity, water quality. So that are the main risks which are there for the euro area. We heard it also in Poland, and I think it's the same in the Netherlands. So if you look in the Netherlands, which was also being raised earlier, water can be summarized as too much, too little, or too dirty, and that's all what we see in the Netherlands. If we zoom into the Netherlands, well, historically, flood risk has a high relevance in the Netherlands and also a high attention. So, but that's not come as a surprise, because 1/4 of our country is below the sea level and half of the surface is at risk of flooding. So it has historically, it has a great importance to flood defenses. And that tells something about, well, what we were discussing before, because you have two items. You have probability and exposure. And then if you look at flood risk, well, a DNB study, floods and financial stability, shows that the probability of flood is low and the expected damages are contained at this point in time. And it's also because of all the adaptation measures, so you will have been taken in the Netherlands. And this can change, of course, with climate change. It can, well, impact the probability, but and also the impact, but that is countered by measures from water authorities. So if I look at in the Netherlands, the main risks which we see is more in water availability, drought, which, well, maybe came as a surprise when I said it 1 year ago, but having the current experiences, I think people will understand that drought is also a problem in the Netherlands, and pollution. And pollution, well, it's also due to nitrogen, phosphorus, etc. So what is the impact? Well, increasing cost and also the availability of water. So how do we manage that within the bank? I think it's quite a similar story as which was being told by BGK. We don't manage water as a separate risk, so it's part of the ESG risks. And if you look at ESG risks, well, it's a transversal risk, so you need to translate it into traditional banking risk, credit risk, liquidity risk, market risk, etc. So the first point where we start is with the identification. It's and then we have physical risk and transition risk. And transition risk are most related, of course, with, well, regulatory requirements or adjustments you have to do because expectations are changing. These risks are mapped to the sectors, and as such, the impact is established. What Sophie was referring to is also the interaction you have with regulators. So if I zoom in on that specific area, our bank is being supervised by both the ECB and our Dutch national bank. So we have exchanges with both of them, but let me zoom in on the Dutch supervisor. I think which is one thing which is really worth mentioning is the Dutch Sustainable Platform, which was founded in 2016. And it was founded to be an enabler for the dialogue between the financial sector, supervisory authorities, and government. And it consists of several working groups. For example, climate adaptation, biodiversity, those are separate groups. The working within these groups are to produce thematic reports and recommendations. Practical tools and frameworks. For example, one of the deliverables has been a fact sheet about climate adaptation of business parks. And it's a hub for sharing knowledge and best practices. So I think the platform is very welcome. It meets what was mentioned by Sophie before, that you shouldn't do it in isolation, but you should do it in partnership. And I think the platform is an excellent example for that. Besides, with regulators, we also engage with knowledge institutes, such as Deltaris. It's a Dutch research institute, but I think it is well known beyond the Netherlands. But just to briefly introduce it, it models climate risk and especially water-related risks. And it's very helpful to have a deeper understanding of the risks. So it helps us in understanding in a more granular way the risk of water. We are bankers, so risk of water is a different area, so to say. And it delivers very helpful data to assess the risk. So it has impact maps of flooding, the probability of flooding, etc. Finally, we engage with our clients, which also give you a good understanding of the risks, but also on the adaptation measures, especially if we look at the nature of our clients. So the water authorities, they're also responsible for managing the risk. So it is very helpful to have a view on that. So I think that is a bit on the interaction we have with regulators and other participants in the water industry.
Excellent. Thank you, Tim. I don't see questions right now in the chat, but if you do have questions, please put them in the chat, the Q&A, or raise your hand. I mean, I have a question for you, Tim, as we wait for the audience to come up with more questions, because what I wanted to know is, the Dutch central bank has been quite advanced in analyzing those risks. So how do you find that you can engage with them further, but proactively, so that their supervisory frameworks also meet your needs? What would be practical advice for other PDBs that you can recommend doing? Either you've done it or you're planning to do it, to engage more with the financial supervisory authorities, both at the Dutch level and, as you said, at the European Central Bank level. Thank you.
Well, thank you. Thanks. And I think, as I mentioned, the platform which was established, I think that's a very good way to engage with the supervisor authority. And maybe it was also, of course, at the initiative of our regulator, in close dialogue with the financial institutions and the government. But I think it is a way to have a two-stream dialogue. So it is a way for the regulator to have their intentions and to share their expectations, but also to build common knowledge. And it's also a way for us to feed into the regulatory process specific points you have to make. So I think, if you want to have a general advice, well, it is good to have a place, call it a platform, where you can have those two-way conversations.
Yeah, that's very interesting, because that's actually one of our first recommendation for the roadmaps at national level, is to create that sort of space in which the financial institutions and water sector actors can speak together. In Spain, there's a Consejo de Finanzas Sostenibles, so a sustainable finance council that has been created just over a year ago, and that was seen by the players as one potential platform, as you said, for these discussions. So as we were speaking, there are two questions that have come up in the chat. The first one is from Nathaniel Mason, who's is an independent consultant based in the UK. And his question was, based on, how do you think the public development banks compare with commercial banks who are also carrying out water-related risk assessment and looking to manage those risks? Do you think one group of actors is ahead of the other, and who's learning from whom? And then there was another question from Andy Robbie from FCDO related to your comment about the Deltares, because they've been funding Deltares as well for the water resilient tracker. And they are wondering about developing a specific module for banks of a water resilient tracker. So he was asking, I mean, I don't know if you're familiar with that tracker, but he was asking whether you think that would be of interest to public development banks. What kind of tools would you like to see developed at an international level? There are more questions, but maybe I'll let you respond to these two, because we're getting to the end of a webinar, and then you can answer the other ones perhaps in writing later. Thank you.
Okay, well, thanks for the questions. Well, comparing public development banks with commercial banks, it's a bit hard to do it without having a total overview of what is happening in those commercial banks versus public banks. I think as a very general remark, I think the difference lies not in the nature of the bank, but you can imagine that it is also related to the size of the bank. So in general, when you have a bigger banks, then the level might be more at the up than at the down. So I think that's a general remark, so not on the type of business. I think, well, that having said, and don't want to contradict myself, but I think if you look at public development banks, their interest is also to pursue public policy. So we're quite related in that sense to managing the risks also from a government, so trying to implement the adaptation part of it. And I think that's distinct natured from commercial banks.
Mm-hmm. Great. And on the point on Deltares and the type of tools that you might need. Mm-hmm.
Sorry. So yeah, thanks for reminding me. So I wrote it down, but I forgot about it immediately. But sorry. So the point about Deltares, I'm not up to speed with the tracker in detail. So, but I would be very interested if you could share some information on that. So because in general, as I pointed out, and I think it was also mentioned by Marta, one of the biggest challenges is to get data. So we're always interested if there are sources of data. So I would be open to receive some more information.
Yeah. And I guess to get data, but also to make sense of that data, right? Because sometimes there's a profusion of data which comes in different sort of places. So sometimes having those tools that bring it all together and in an analytical manner as well helps. So, there's the Aqueduct tool, but is that sufficient to do portfolio analysis? That's a big question. So that's also something that we will be discussing in the policy recommendations, the roadmap coming out of of a roundtable from Madrid. And with that, I think we will need to close the webinar. I did put in the chat the link to the page on the roundtable on financing water. I see Andy also put the link to the water resilience tracker. So we will be sharing those resources in a summary email, and also we will be sharing the PowerPoint slides that have been presented today. So thank you very much for your engaged participation. It was a great discussion, something to be continued, and please send us your questions, your areas of interest, so that we can contribute to continue to feed that into the Public Development Bank's audience specifically. Thank you very much, Tim, for your insights, and look forward to engaging with all of you later. All right, thank you. Have a good afternoon. Bye.
Okay, bye.
Thanks, everyone.